much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, a new Fed chair is named. Markets are reacting today to Kevin Warsh's nomination. We'll trade that and, of course, the Apple aftermath along with the rest of tech today. Joining me for the hour, Stephanie Link, Jim Lebenthal, Rob Seach, and Josh Brown. Let's go to the markets where we are red across the board today with the Russell 2000 because rates, watching that obviously and what's happening in some other areas of the market, the Russell's given back more than anything else, but we do have declines across the board. All right, so Warsh is the nominee. Everybody knows that by now. The dollar's move today is interesting. Silver, let's just look at silver. Silver is getting obliterated. Gold is down too, but these have been, show now the longer view, so you can see the amazing, unsustainable, some have suggested, run-ups in all of this. Why is this happening today? Well, there is a view that Fed independence is safe with Mr. Warsh. And by the way, BlackRock's Rick Rieder would have delivered, I think, the same sort of feeling in the markets. Of Mr. Rieder, he told me about not being chosen, quote, "This has been an incredible honor for me. I congratulate Kevin on his nomination and think he will serve the institution and our nation very well." I don't want to have a policy conversation. I want to have a market conversation. Gold and silver. A lot of people have been piling in there. A lot of retail has been propelling silver's move. It's almost been meme-ish. Is this over?
It may be on pause, Scott, but you're exactly right to use the word meme-ish. Now, just a little backdrop. We've talked a lot on the show about how retail is no longer the dumb money. In fact, it's been very smart. What it's also been is very fast. And we see that in the options market, where silver in particular over the last few weeks, the open option contracts have absolutely skyrocketed. And that's in large part, why it propelled the heights to which silver went. Now, let me be clear. The direction of silver, both to the upside and today to the downside, is definable by market forces, namely concerns about the dollar, concerns about the Fed independence, which may be put at least a little bit to rest today with the selection of Kevin Warsh. But the degree to which silver shot up and which it's come down is likely the speed with which retail players are accessing silver via the options market. And I'm telling you, the volume there has shot through the roof.
I mean, escalator up, elevator down. That's what they say, right?
Absolutely.
I wonder if we're going to end up, Rob, seeing something similar to that.
Well, you certainly saw a mania phase reached earlier this week, maybe even yesterday, when trading on silver options surpassed trading on NASDAQ options. I don't know that we've ever seen that in the past, right? So when you have activity like that, it's an indicator of mania. I do think, you know, when you look at assets that move in a parabolic way like that, you're going to see exactly what you talked about. But you need a catalyst. This certainly
maybe Warsh is a catalyst.
I think it is.
Independence
I think
and
it
a
is.
stamp on that appears to be a catalyst for something.
It's not just that, though. It's that this is a guy that had hawkish policy during his tenure from 06 to 11. The great news is he's a responsible adult in the room. He lived through the housing bubble and then ultimately the financial crisis that followed. He's shown a recent willingness to cut rates, I think, and obviously enough to get President Trump to support him. But markets at least feel today that he's going to revert to his hard money roots. And if he does, I think that that's going to create some episodic challenges.
No, it's like fool me once, shame on you, fool me twice, shame on me. I may have gotten the inflation picture wrong multiple times before, and I'm not going to be burned by the same thing in the next go-round now that I'm in the biggest chair in the room, not, you know, one of the second tiers as a Fed governor. But
you could argue that he was, you know, that the change was positioning for this role, and that there could be a reversion, which I think broadly, long-term, is healthy for the markets to have that independence.
But again, like, you know, for our viewers and the broader audience that's been piling into and playing the momentum, right? We've seen so much of a momentum game on Wall Street at times, whether it's meme stuff or like this, what's happening. You never see this kind of rush into silver or gold. Real quick.
It has sucked even assets away from crypto. I am telling you that
crypto's under pressure. It sucked assets kind of away from a lot of different things. And
yes.
Is this trade now done for the foreseeable future, Steph?
Maybe it does take a pause, like Jimmy was just saying, Scott, but I'm just happy to get the news out there and get the unknown to be known.
You ain't lying.
What,
we all are.
Right? I know, but the point being is that unknown and that hostility between Trump and Powell, actually now that might just go away with Warsh, right? And so if you have a nice, disciplined relationship, things calm down just a little bit. Now, in terms of gold and silver, I actually think you've seen central bankers, changing their asset allocation over the last couple of years, selling some U.S. treasuries and going into other asset classes like gold and silver. And then it just got exacerbated by retail following that momentum. I don't think you're going to see central bankers all of a sudden sell gold, sell silver. The difference between gold and silver, though, silver, half of it is an industrial commodity. And we just got some great manufacturing data, durable goods data, factory orders data, and AI. It's all supportive of using more silver, more copper, and a lesser degree gold. So I think there's a reason to have exposure because of all the things I just mentioned. But I think the big catalyst was the central banker starting to move assets away, and maybe they just stop that, and so therefore you see the underlying commodities take a pause.
All right, Josh, your view of all of this. Again, we don't want to debate the kind of policy we're going to have really under Mr. Warsh if confirmed in the Senate, but nonetheless, what these specific trades, which I gather you probably have been asked about a lot over the last many weeks as we've watched these things go parabolic.
Yeah, look, there's no need to debate policy because that has nothing to do with what's happening with prices today. It's just an excuse. Like, we could have, if gold and silver had done what they're doing today and there wasn't the announcement of Kevin Warsh, we would have found something else to decide is the explanation. The reality is it's not that complex of a situation. I was with Tom Lee last night, and he had mentioned that on Wall Street Bets, the numbers 1 and 2 most talked about tickers, don't fall out of your chair when I tell you this, were SLV and GLD. So gold and silver, yes, central banks have been accumulating by the ton for years now. That's the primary trend. And then the trend got noticed by the momentum players and the retail, and it got sucked into the casino.
Sure, just what we said.
And it got sucked into the algos. And that's the story. And whatever the trigger is almost besides the point. I think what got revealed today is that there was a ton of unsophisticated money, committed money, and a lot of leverage, and boom, this is how it works. And I'll tell you, gold down 7% today, silver down 17%. It's remarkable in more than one way. Gold had its best ever one-day return 2 days ago on Wednesday. It was up 6.5%. That's the best ever back to the financial crisis. And today, down 7% will be the worst one-day return since April of 2013. Having that happen back-to-back, there's nothing fundamental about it. This is all leverage, and I think it's very healthy, quite frankly. So if you're a gold bull, silver bull, doesn't mean it's over. What it does mean is a lot of dumb money got flushed out, and now prices can reset, and you can bet on that longer-term uptrend if you want to.
So Tom DeMark would agree with Josh on that, by the way. Tom, one of the most famous technical strategists. He thinks the upside is pretty significant. I forget the target, but it is.
Sure, but the rate of the upside has been...
That's right, the rate.
Insanity.
That's right.
Yeah.
And that's, I think, what Josh is talking about, and also why the big burst up and the big burst down ends up happening, because the insanity, runs its course.
Yeah.
So the other big story I wanted to get to is Apple and the reaction, if you want to call it that, to great earnings. What else do you want to say? I mean, they had staggering iPhone demand. They had a strong sales guide. iPhone revenues were up 23% year-on-year, new record high. China sales surged up 38%, best quarter since the end of 2021. Services revenue up 14% to a new record high. The stock was down like 8 consecutive weeks coming in to those numbers. That sounds to me like a blowout quarter. And yet the stock's reaction is that. Why? Did I say the word AI? I didn't. Everybody knew that the iPhone's good, and it's been good. But I mean, there's no great AI story yet to tell, and that's why the stock sits there sort of meandering around now.
Right. Can we call this flat today? I'm going to call it flat.
Of course.
Sure, it's down a point, 1.5%. But I think the reason it's not up is the concerns that the excellent sales in the quarter and a decent projection going forward might be cannibalizing sales that in the future, when Gemini is really embedded and AI is really gaining traction, that maybe those sales will have been cannibalized by people who delayed for so long upgrading that they finally had to get around to it in the last quarter and in the coming quarter. Now, I don't think for 1 second that interrupts the long-term compounding potential of Apple, but it may just mean that there's no near-term catalysts, and it had run up quite a bit. I mean, let's face it had run up quite a bit on the pretense that AI was coming, and now there isn't that much of a catalyst to get it going. So I don't think there's anything wrong with the stock, but it's not the stock that I wake up in the morning and say, oh, let's check the headlines on what's going on with that.
It's expensive, though, at 31 times.
I will agree with you,
For
Stephanie.
what? For 13 to 16% total revenue growth?
I agree with you. The offset to that, as you know, and I agree with you, but the offset is they buy back shares like crazy.
While you're not seeing a big jump from those blowout numbers, you're not seeing a big decline.
Bingo.
Because
that's it.
The iPhone put the strength of that segment,
put the
floor under the stock. You could make the argument.
I totally agree with you. And we're not overweight the name, we're neutral the name because it's tough to be underweight in the index, as you know, with such a fortress balance sheet and great management team. But the foundation has been set. The foundation has been stabilized. And one of the things that goes unnoticed in the report is the outsized spending that they're doing in R&D, which is still relatively low to the competitors. But still, they're building off a platform base that is exceptional. And if you want to bring AI to an ecosystem, what better ecosystem than one that billions of people use every day? They will figure it out. We talked about this yesterday.
That's the view of Alex Kantrowitz, too, who was on with me leading into the print on Closing Bell yesterday. They will figure it out.
100%.
The iPhone is strong enough that it's okay. They still have a grace period, if you want to put it that way. He used the term Goldilocks because of the strength in the iPhone is so good. And I told you these metrics of the services in China and what the sales are doing there that buys them more time to get it right.
How is this different in different businesses, obviously, than the platform that we were talking about with Google being surpassed a year ago and no one wanted to look at it? No one. They figured it out.
Well, I mean, thank you for that. Thank you for the
and I bought it too.
The follow through. That's fine. But I mean, Apple has not had as bad a run as Google. Alphabet had.
And Google was cheaper back then too. Alphabet, rather.
Yeah, and that's to Stephanie's point as well. I do think that there is some cannibalization. I already said that. I also think that today's lackluster response, I hear you, it's not down more. Maybe because people are kind of tired of hearing about supply constraints, and we heard it again. Obviously, this is not like what happened to Microsoft yesterday, which was a bloodbath. But I think investors don't want to hear anymore, oh, I could have sold more, but for supply chain constraints.
But didn't you make your big, passionate, Red Bull-induced argument yesterday on Microsoft that it was exactly what you're saying you shouldn't blame or don't want to hear about? Did you say that?
So my point being, in neither case am I selling Microsoft or Apple. And this goes back to what I said.
Those are two different things altogether.
I know,
we know that. You don't even need to say that.
Okay.
Why is that relevant?
Because if I go back to Tuesday when I was on with you, not even Monday, but I said to you, good earnings reports from the Mag 7 might be met with tepid response. You remember this, right? We had this discussion, and that's what we're seeing.
But you blamed supply constraints, so to speak, on Microsoft yesterday in your vociferous defense of that name, and today you're telling me that investors don't want to hear that.
He's telling you that this is the argument du jour, James.
I think you think I'm being Red Bullish when I try to stand my ground. I'm not. I'm just going to stand my ground and say this. In neither case have I sold shares of Apple or Microsoft. And what I've said in both cases, including Apple yesterday, is that this is a great long-term pounder, and I'm going to say the same thing about Microsoft. Josh, you and I spoke about this yesterday, that it may be in the penalty box. And you said for a quarter on Microsoft, I said till the summer. I mean, we're kind of in the same ballpark. Both of these stocks, I don't think they're going to get crushed from here at all. But I don't think, as I said in the beginning, I don't think that this either stock are the ones that you wake up in the morning and say, ooh, what's going on with Apple? What's going on with Microsoft? Maybe the share price is getting going here.
Are either of you concerned that the replacement rate at Apple went to 5.2 years from 4? The replacement rate cycle is not. I mean, maybe people are waiting for AI, the AI phone. I'm sure they are, but that's a big, big change. And
they've thrown in the towel in the last quarter. I mean, that 5.2 years, I'm probably one of them. At a certain point, you've got to replace your phone. It cracks.
That's not happening as quickly, though.
It's not happening as quickly.
We all know you probably walking around with like
he's with the 13 11. Right now.
Got like the 11.
Listen, I'm a loyal consumer. Okay, I'm a loyal.
Josh, what's your view?
Here are the two most important, in addition to the sales beat and the revenue guide, here are the two most important things. China region sales up almost 40%. And I understand a lot of the sell side,
17,
they kind of don't care as much about China as maybe they once did, or they don't really see it as that important of a driver. I think that's the wrong way to look at it. Here's a quote from Tim Cook. We set an all-time record for upgraders in mainland China, and we saw double-digit growth on switchers. That's a really powerful signal. The other thing, there are now, this is also Tim Cook, 2.5 billion iPhones, Macs, and other Apple devices, which is up from 2.35 billion 1 year ago today. This is really critical because the reason the stock has the multiple it has is not necessarily because of the upgrade, how long it takes to upgrade a phone. It's just the sheer number of these devices and that lock into the ecosystem, and that will not change. That's what people care about the most. And I think, the way that this stock is kind of dribbled lower going into the number, this is probably a clearing event, and I wouldn't be surprised to see this green by the end of the day.
I need to make a correction on there. I do. I misstated Jim's ownership model of the iPhone when I suggested that he's toting around an 11. It's a 14.
In a loyal, self-described loyal customer.
A guy who knows about these products so well.
It's a 14 Pro.
Walking around with a 14.
Okay, like everybody in my family.
Your credibility is highly in question all of a sudden.
Well, it actually goes directly to what Stephanie was saying.
Maybe you need an upgrade cycle.
You know what? You want me to call you right now? I'll bet your phone rings.
No. So Eric Woodring of Morgan Stanley is going to be on Closing Bell with me today. We look forward to that. He's talks about the iPhone outperforming their estimates. Product mix appears to be underappreciated. Not out of the woods yet, but we feel incrementally better about the setup for the stock. Again, we need more on AI. Everybody knows that, but maybe this buys the company some time to do that. We look ahead to next week when we do get Alphabet and Amazon. Alphabet is on Wednesday, Amazon's on Thursday. The Street's positive, as you might expect, on both going in. Step trying for its best week since October. The stock was running. We waxed on it yesterday. We did. And we were saying that Arvind Krishna doesn't walk around with a leather jacket on. And people don't mention his name all the time.
That's good.
And he doesn't sign autographs everywhere he goes. But maybe he should.
Maybe he should.
Because if you look at the longer trajectory of this name after literally doing nothing, both in their revenue growth and the stock, to the frustration of many, many long-term shareholders, that stock's done that.
Steph and I bought this very similar times on the show.
Well, I think it was just when Arvind got the job.
So if I recall, there were a few years ago, maybe it was, where IBM was the best performing name that year. And people were just starting to get their arms around, okay, they've successfully integrated Red Hat, and they have a roadmap because they have arguably been dabbling around in AI longer than most. right?
And
What do you think?
just wait until quantum computing. That's a 2029, 2030 story, and they're the #1 player in quantum computing. He's done all the right things. He's focused on AI, data center, quantum, blockchain, all of the things in software. This company now does about 75% in software and consulting. It's not a mainframe company anymore, although they did quite well with mainframes. I never pay for that, though, because it's such a cyclical business. But they grew software 14%. They had consulting growth for the second consecutive quarter, which Accenture did not, and they are taking share from Accenture. And then you have their Gen AI book is now at $12.5 billion to exit the year, and free cash flow is they actually raised it. So everything is kind of clicking for IBM. The only issue is it's a little expensive at 29 times earnings, but the growth is changing, and the complexity of the company is changing as well.
That's what I was going to say. It's the fastest growth they've seen in the top line in 9 years.
Yeah.
Or 10 years. And they are kind of firing on all cylinders. So I would argue that the multiple may justify the premium right now.
All right, let's take a break. Calls of the day.
Yep.
Let's talk Starbucks. Reiterated by 105, the target after Stiefel. That is after Investor Day. Earnings were this week, too. And, you know, we've mentioned multiple times this week that Stephanie Link wrote something special for CNBC Pro. I urge you to go check that out. She obviously continues to make a bullish case for this name, which I would assume that you are going to do right now.
Yeah, and I'm actually going to buy more when I can. I think they did a really good job at getting back to the historical earnings algo that they have had historically. Same-store sales of 3%, mid-single digits total revenues, high teens earnings growth. The one missing link that is going on right now is operating margins. They're only at 10%. They were 17% pre-COVID. I think over the next 2-3 years, they'll be able to get back to 17%. That gets you $4 plus in earnings power. That brings down the multiple at about 23 times. Historically, the stock is traded at 28, 29 times. So I like what the CEO is doing. He's got a phenomenal track record. The stock should be bought, especially with it down post the earnings.
All right, we have some breaking news out of Washington. Eamon Javers has that for us now. Eamon, tell us more.
Scott, that's right. President Trump talking to reporters in the Oval Office just over the past couple of moments. And the president was asked if Kevin Warsh had made any commitments to him in terms of interest rates and lowering them in order to get the job as Fed chair. The president said no. Take a listen to what he said.
No, but we talk about it, and I've been following them, and I don't want to ask him that question. I think it's inappropriate, probably. It probably would be allowed, but I want to keep it nice and pure. But he certainly wants to cut rates. I've been watching him for a long time.
So you heard the president there say no, but he does believe that Warsh is somebody who does want to lower interest rates. And so that clearly sets up a presidential expectation of Warsh should he be confirmed to that position, Scott. And of course, the president made a couple of other comments here, including praising Kevin Warsh for his looks, saying looks don't matter, but he's got the right look for the job. So to the extent that matters, the president commenting on the appearance of the new Fed chair as well.
Okay, Eamon. Okay, thank you. It's Eamon Javers, Washington. All right, let's continue our list. Uber. I mean, whatever. The target trimmed to 110 from 119, reiterated buy at Bank of America. Josh, give me something.
I think the salient point here is that a lot of people are bullish on the fundamentals, but worried about 1 year, 2 years, 3 years from now, because it's unclear whether or not Uber will have made sufficient third-party deals and enough progress on their own autonomous plans to have the app be able to withstand new challengers like obviously Waymo and of course Tesla. And I don't know when those clouds go away, to be honest with you, because it's a sentiment thing. The fundamentals are on fire. They report next week. They'll do $14 billion in revenue. They'll do $1.8 billion in cash flow. They're buying back stock. This thing is a money-making machine. And from my perspective, autonomous driving is probably one of the biggest drivers of potential upside when you understand how much of the take rate Uber keeps versus how much they have to pay to the people driving cars. If they can get 10% or even penetration of autonomous vehicles on their network, Obviously, it's a better deal for the consumer because price comes down, and Uber probably keeps more of it. So I see autonomy as bullish, but apparently most of the street doesn't, and that's why you're seeing people saying, yeah, we still like it, but we're worried, so lower price target.
All right.
You know, good for them. I'm on the other side of the trade.
Okay, GE Vernova upgraded to a buy today. I'm surprised that Guggenheim didn't already have that. 910 is the target.
Yeah.
Doesn't like everybody have a buy on this, including Link Capital Management?
Yeah. Yeah, they had a really good quarter and the stock sold off. Orders were up 65% versus 55%. The prior quarter, their book-to-bill was 2 times. I haven't seen that yet since they were spun out. Their total revenue guide, they raised that as well. Margins go higher. They're sold out in gas power until 2028. Why would you not want to own a stock like that?
Okay. Gilead, target to 146 from 114. Outperform Leerink. Bottom line, we're raising our target to reflect our growing confidence in the preventative HIV drug that they have, the launch and the appreciation of the company's pipeline. Rob.
This is a name we've talked a lot about on the show. It's performed incredibly well. We've continued to add a good bit to it over the last several quarters. Been a bright spot in the space with consistent growth in their core HIV platform. And obviously a lot of things happening on oncology there as well. And it's not that expensive. It trades at a PE of 16 times. So we like the name.
All right, Pip. We're back. Exxon and Chevron both reporting earnings beats today. The stocks going in opposite directions. Let's take Exxon first, because stock is lower. Lower oil prices. They beat. They achieved its highest full-year net production in more than 40 years. Jim Lebenthal.
Yeah, I think the reason it's down today is simply that it's been up so much.
Did hit a record high yesterday. Good point.
I mean, it's up 15% even after today's decline for the year to date. We can go through the numbers. I mean, the 5-year track record, it's doubled the S&P 500 on an annual basis, and there's every indication that it's going to continue. Now, I actually think it's maybe a little silly for me to point out that crude oil prices are at what seems like a 1-year high. Natural gas prices we know have shot through the roof, and the reason I say it might be silly is because that can be given back if there is no strike on Iran and if warm weather appears. I think the more pertinent thing is when you look at ExxonMobil, there are so many pistons firing in this engine, whether it's exploration and production, whether it's chemicals, refinery. I don't have time to go through the long list, but the punchline of this is over the next 4 years, they're going to increase cash flow by $35 billion on top of free cash flow in the last year of $25 billion. $60 billion in 4 years of free cash flow. I mean, the market cap, and I've got to look it up. It's a $600 billion market cap. That's great. Like, let's hang on to this stock.
Thought you said you weren't going to go on and on. I'm just kidding.
There's a lot more I could have.
I know. Chevron, 52-week high yesterday as well, and you see that stock is in the green today. They beat as well. Their production hit a record too. Had some Venezuela upside. Steph, what do you think about this name?
I mean, I thought Chevron was better than Exxon. I really do. I really do.
Why,
I think,
why so?
and the
Why?
market's probably telling you that too.
Yeah.
Because
Why?
production growth of 21% handedly beat expectations. They beat on throughput, upstream and downstream, across the board with lower costs. And free cash flow grew. Adjusted free cash flow grew 35%. They increased the dividend. Now you're getting a north of 4% dividend yield, and the stock trades at 11 times EBITDA. So I still like it. I think this was one of the better quarters I've seen from them in quite some time.
Okay, Robbie, Devon Energy and Coterra said to be in advanced talks on a combo, according to Reuters. You have Devon.
We do. It's one of the recent buys that we talked about on the show in December, and it's up a little bit year to date. Not surprised given how attractive the fundamentals are in this space and the potential for synergies and the economies of scale that a merger like this would likely create. So I think these are great businesses. I think, what's surprising to me is without the price of oil moving much, some of these stocks have done really, really well. And you kind of need to see that follow through in energy prices for it to be sustained.
Josh, your thought. One going one way, one going the other, but energy going up almost in unison, top sector this year, and we said best month since October of 22.
Yeah, these are the most under-owned stocks in the market. The energy sector as a percentage of the S&P has shrunk more than any other sector in this post-COVID era. It's incredible when you realize even without a crude rally, even without a major natural gas rally, although I know it's rallied a lot going into the snowstorm. These companies are executing flawlessly, and they don't have that tailwind of commodities at their back. If that changes, if oil is the gold of 2026, all of them will be substantially higher. I'm in Exxon. I agree with Jim. The stock's up like 30 straight points. It makes sense that it's down $1, sell on the news, but the real investors are not selling this name.
Okay, let's do the setup. Talking about some earnings next week outside of the mega caps. Disney is on Monday morning. Jimmy, you own it. The most intriguing thing to me feels at this point like, are we finally going to get Iger's successor named?
Yeah, I mean, there's a perception that it should be sometime in the month of February. They've got, I believe, an analyst day or an investor day coming up in early March. Seems like it's taken a long time. They have to know who the choice is by now. So let's just get it. Let's rip the Band-Aid off. It shouldn't even be a Band-Aid to rip off. As an investor, though, what I do remark is this is the point in holding a stock like Disney where you wonder, is it a consolidation or something worse? Now, let me be clear. I think it's just a consolidation in the share price, and the stock has gotten extremely cheap. I think they're doing everything right with streaming. The theme parks, the cruise businesses are going great. So I'm holding this, but it is the point where one's mettle is tested in holding it.
We shall see. Estee Lauder's Thursday before the bell. Stephanie Link.
Yeah, I'm wondering if they can continue to see better organic growth. Last quarter it was 3%. They're guiding for like flat to 2. I think they can do 3%. Beauty Reimagined is a strategy for them that has been gaining momentum, but also they need to see cooperation from not only U.S. strength, but also China. Both of those regions are 50% of revenues.
You got a busy Thursday morning because Rockwell Automation is also then. What's your take here?
Yeah, I mean, I think last quarter they grew organic growth at 13% versus the prior quarter of 3%. So they're making momentum changes too, given all the new products that they have underway. Operating margins expanded over 200 basis points as well. I think they can get to the 23.5 operating margin number over time, but we're going to have to get commentary to feel comfortable about that on the call.
All right, Amgen's Tuesday, Rob.
So in terms of Amgen, I think we're looking for a modest 4% revenue growth guidance that would alleviate some of the concerns around the biosimilars in the names, in that name, and an update on the evolution of their GLP-1 drugs, which they have a number in the pipeline. 6 phase 3 trials underway.
That surprise you there? Are you good? You good?
I was expecting something else.
You don't say. You hide it well.
Was it that obvious?
We'll do finals next. Josh Brown, your final trade for us today is what?
Breaking my own rule. Rocket is very red today. I think the sell-off is based on stupid stuff. I'll probably add to it at some point. I like it right here.
All right, the man who said
Did he
never
not
do a
just
final trade.
chastise me
Where it's
yesterday?
red on the board.
Now mine is green. I'm going to go in.
He did say he'd break his own rule.
Look at
and
you.
that's what he was referring to. Gilead, is you?
That's me. I'm going green.
Wow, that's really strong today. Farmer Jim.
On holdings, we'll report in a couple of weeks, should show great holiday sales.
Okay, good stuff. Stephanie Link.
Synopsis. I don't own it yet. It's on my radar screen.
All right, good stuff. I will see everybody 3 o'clock. Again, we'll track this market. We are red across the board. The exchange is now.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. We just saw some clips from the halftime report. Josh Brown and other guests sharing a number of stocks. There were about, let's take a look at the list that I wrote down. Now, it's not all of them, but there's about 15 stocks and ETFs that are mixed up here that I'm going to go over. I've already reviewed them, but I'm going to basically give you guys the technical analysis of those specific stocks. We'll also take a look at Tesla, Apple, Meta, Microsoft, and Netflix, the indices as well. But look at silver today, down 28.59%. I'm going to explain to you guys how we can use technical analysis to help us identify potential dangers on the charts, okay? And then the other thing I want to do is take a look at the indices and the heat map. So before we get started, don't forget to hit the like and subscribe button, and I appreciate that, okay? Thanks. Okay, so it is currently 4:39 p.m. And you can see how the markets performed. The Dow was down 0.36%. You can see that it actually gapped down in the morning, dropped, and around 2 p.m. it started to recover a little bit. So it was only down 0.36%. The NASDAQ, on the other hand, It basically also gapped down, but stayed down, down 0.94%. The S&P 500 also dropped 0.43%, had a little bit of a higher low there from the prior one. So this one could turn into something potentially on Monday. The Russell 2000 was down 1.41%. It was down the most. Let's take a look at the heat map. It's going to show us the individual stocks within the S&P 500 and how they performed. And you can see that Tesla up 3.33%. The telecom services companies like T-Mobile, Verizon, AT&T were up the most today. Well, I mean, as far as the actual industry. And then the healthcare stocks did well. Some of the medical devices like Abbott did well. CVX and Exxon did well. Um, Berkshire was up 0.78%. A lot of mixed performance here. If we look at the 1 week performance, though, since we are on Friday, the end of the week, let's take a look and see how the stocks all performed. You can see Microsoft for the week is down 7.65%, Tesla down 4.15%. The software applications didn't do so well, a lot of red right there. Google was up 3%, Meta was up 8.77%, Apple was up 4.61% for the end towards the end of the week. And you can see AMD was actually down 8.84%, but the majority of the semiconductor stocks did well. Utilities also did pretty good, and so did the energy companies. All right. So let's get into the stocks, guys. And we're not going to start off with silver, but we will be covering that in a second. We're going to start off with the indices first. And here's the S&P 500, the SPY ETF. Let's go ahead and make this chart just slightly bigger. And we'll throw on the weekly chart so I can show you guys what it's looking like. For multiple weeks, we've been stuck in this consolidation stage here. You can see that price hasn't really moved much, right? It's been kind of stuck, and it's still under that $696 level. Right now we're at 691.97. So that's the high that it needs to break above, in my opinion, to see a continuation to the upside. Here's the daily chart. You can see how it's pulled back here, down 0.3%, but found support at the Tenkan and Kijun. So it's holding up as far as the Ichimoku indicator. And with this indicator, the key thing that we're looking for basically is for price, right? We want the little Japanese candlesticks that you see right there, which is actually the price, to be above the green line, the red line, and the Ichimoku cloud. So you get the Tenkan, the 9 period, the 26 period is the Kijun. All right, it's the highs and lows divided by 2 of the last 9 periods. Highs and lows divided by 2 of the last 26 periods. And we want the green line above the red line so that the faster moving average is above the slower one. Then you get the single span A, which is the midpoint of these two moving averages, and that projects into the future to create part of the cloud, the single span A. And then you've got the single span B, which is the midpoint of the last 52 periods projected into the future. Okay. And that's how the cloud itself is plotted. You've got one more line, and that's the Chiku span or lagging line. And the Chiku span is basically today's price projected 26 periods into the past in a line form. And so what we want is that white line to be above the candle 26 periods ago. And if that's the case, then it's bullish, which it is in this case. All right. That's basically those are the rules of Ichimoku. If any of those rules, okay, start to break down, then the stock becomes weaker or the ETF becomes weaker. Right now, it's pretty perfect, even though price has been consolidating here. The weekly chart is still very strong with price above the moving averages, like I mentioned. And the same thing applies here on the daily chart. It's still above all the moving averages. The Tenkan and the Kijun are at the exact same level, it looks like 687.21. But overall, I'm liking what I'm seeing here with the charts. Now, the directional movement index is showing a little bit of giving us a little bit of a contrast, giving us uh, a negative situation here because you can see that the ADX, which represents the momentum, that's actually moving up. And that's not good when the red line is above the green line here. The red line is the negative DI9, okay? And the green line is the positive DI9. This specific indicator is called the directional movement index. All right, I've got a setting of 9 versus the traditional setting. And so I use this as a secondary sort of confirmation type indicator. But the main decisions that I make are based on the Ichimoku indicator and I use both the weekly and the daily time frame. Okay, if both time frames are looking very bullish, then I'll put a little blue flag here on the left. So you'll see that with some of the stocks that I'll be covering in a few seconds. All right, FEZ. is the Euro Stocks 50 ETF. So the European stocks are still looking okay, even though they dropped 0.98%. They actually dropped a little bit more than the SPY today. They held up right above the moving averages. The Tenkan and Kijinsen, we've got a higher high from the prior one, higher lows here. This is all good. On the weekly chart, this is a reversal candle. So you're going to see a lot of reversal candles today. I'm going to be showing you guys these reversal type candles. Now, this is called a gravestone doji. It looks like a gravestone, right? So it's a flat, almost flat body, and then you see the wick in the top here, a small wick like this. And let me just show you what that looks like on our cheat sheet that we have on my Twitter page. So if you want to get that for free, that cheat sheet, just go to x.com. Okay, look for me, do a search for at Blue Cloud Trader is the handle. Once you're on this page here, what you want to do is look down below. You'll see posts, replies, and highlights. Click on highlights. And once you do that, just scroll down a little bit until you find the cheat sheet right here, the candle pattern reference sheet. And there's one more cool pattern sheet below here for the actual stock patterns. Now, let's click on that for a moment. And here it is. I'll just circle it for you so you can see what I'm talking about. There's the gravestone doji right there. So it's like a basically a wick and very flat body. Okay. And if that occurs at the top of a move, meaning after a price has moved up, like you see right here, it's quite bearish. All right. That's a single candle pattern. Some other candle patterns are double candle patterns, like the ones you see here, some of them. And I'll go over those as we get through. If you're not familiar with candlesticks, you should educate yourself on these. They're really important to understand. Okay, so, all right, let's get back. So we can get a, basically what they do is they help us to assess how the market performed on a specific day or week. In this case, we're looking at a weekly chart, and you can see that's a very bearish candle. So the week overall was very bearish. All right, now, let me just one more thing I'll mention because there are some people that are just learning about this stuff. So if you see a green candle, for example, that means that the opening price, all right, if we're looking at a daily, so let's assume this is a daily candle. Okay, the opening price is where the body begins, 9:30, and over here it closes at 4 p.m. The wick represents the high of the day. The lower wick represents the low of the day. Okay, so there's the open, there's the close, and there's the high of the day and the low of the day. And so that's what creates the candle. Over here, it's the opposite. The opening price, instead of being down here, it's actually on the top. Okay, you can see how price moved up for the high of the wick, and then as it moves down, it maybe reached this low down here, so it's the actual low of the day. But then finally, the buyer stepped in, pushed it, and the price closed right there, creating the body. So the body is the always going to be the open and close. Okay, open and close. And the wicks just all they again only all they represent is the highs and the lows depending on where you see it on the candlestick. Now let's go ahead and get into these other ETFs like the QQQ ETF, which there's another gravestone doji. Okay. However, like I said, if we're looking at the weekly chart, this still looks pretty good on the weekly. We are looking at a weekly chart right here. It's still under that 637.01 level. It's based on that prior high over here, one of these candles, that one specifically from October 31st of 2025. So think about that for a moment. What that means essentially is that price has not broken above that October 31st of 2025 level on the for the Qs. This has just been a sideways move here in the markets. Markets are just digesting all the craziness that's happening in the world, essentially. And so on the daily chart, it's pulled back here down 1.2%. And it's stalling right on the Tenkan and Kijinsen. Um, yeah, let me just see this. Did it close under 621.87? It technically closed right above the two moving averages, but the moving averages are at the same level. I'll give it a flag. We'll give it a flag too. DIA ETF, on the other hand, is in between the two moving averages. So you can see that's called a doji right there. And that's a reversal candle too, but it's right now it's just kind of again, I wouldn't pay too much attention to these candlesticks because these reversal candlesticks because they're not happening after price has moved up. This is just sideways action. Again, since entering this little box that you see right here, which occurred back on January 5th of 2026. So that's a daily chart. No real movement here for the Dow. Here's the weekly chart. Okay, so 4 weeks in a row we're stuck. So we'll see if we can get above that 496.34. But I would not be adding positions here. Russell 2000. It's more of a hold type situation. Russell 2000 has pulled back as well, right? So I talked about this. How we broke under the Tenkinson, the 9 period. That's the first sign of weakness. Then, if you notice that price remains under, obviously notice how every time they came up, found resistance at the moving average and then retreated. Same thing here, retreated. Same thing here. And then when it came to the other moving average, the slower one, the Kijunsen, price actually found some support and started getting pushed back up again. So right here, the Russell 2000 is just taking a breather. I think it has a good chance that we might see a little pop here once because we are right on the support level. So on Monday, I wouldn't be shocked to see the Russell if it's a bullish day. Of course, that's all dependent on the news as well. But if you see that the market's moving up, Russell has the highest chance of doing bouncing, in my opinion, versus the other indices that you're seeing here right now. Okay, and then the VIX, which represents volatility in the markets, that did spike a little bit here, entered the cloud. It actually gapped into the Ichimoku cloud, and then we've got ourselves price dropped throughout, and some of that volatility came out of the market. So it was still up 3.32%. Let's look at the Mag 7s first, like Tesla, for example, which was up 3.32%. But as you can see, it is currently under the Ichimoku cloud. And one of the rules of Ichimoku, which stands for at a glance, is we don't want to be adding positions here when price is under the cloud because we're in a bearish downward trend. You can see that right there. Okay, so stay out of Tesla for now. That's my opinion. Um, that's what it looks like on the daily. And here's Apple. Let's look at Apple also. Right, they came out with their earnings. Did it really anything major happen? Not really. Here's a weekly chart so you can see what I'm talking about. Yeah, we got a little bit of a gap up, found some support at that $244 level. And today, Apple was up 0.46%, but it stalled. It stalled once again at the Kijunsen, the red line. So this is not a buy signal by any means. Meta. Again, the idea here with this technical analysis is to help you get a more optimal entry point and also to get those warning signs to know when, hey, maybe it's time to close my position or reduce my position if things are starting to get a little bit a little scary like they did with silver and gold today. And again, I'll cover those in a second. Here's Meta. Interestingly enough, Meta actually respected my $711 level here based on that prior high. And you can see that once Meta came out with their earnings announcement this week, it gapped up, stayed above 711. Now it's finding support at 711. Even though it dropped down 2.95%, I said, guys, expect it maybe to potentially pull back. I think it's creating a more optimal entry area for Monday. If we get a bullish candle and we stay above 711, I think Meta is starting to look more and more bullish to me. The cloud has turned bullish on the daily chart. We are above that 200-day moving average. And if you look at the weekly chart, the cloud is starting to become a little bit more bullish. See how that single span A is starting to curve up? Okay, the single span B is still flat. And if that starts to moving up too, that's going to be bullish. The Tenkinson, the faster moving average, is still under the slower one, and the white line is still under the candle here. So that's why it's not perfect. That's why it doesn't have a blue flag, but it's starting to show some strength. Okay, we're getting closer and closer to that optimal entry point, in my opinion. Microsoft, on the other hand, is doing the opposite, down 0.74% today. Okay, and here's the drop this week under the cloud on high volume. The directional movement index is confirming that because the red line is above the green line and ADX is moving up. That's all bearish right there. And if you look at the daily chart, it's still, you can see how it gapped down yesterday after earnings, right? And is now continuing to the downside. So Netflix, this one has been an interesting one that I've been just kind of curious to see if it can hold up above the 82.11 level. It seems to be so far. If we go, we'd really have to go back in time. Do you see that candle right there? That's a low that goes back to, let's find the exact date. You can highlight here and see April 7th, 2025. Okay, that's the candle, April 7th of 2025. Now we're back at those levels from April 7th, 2025. Now we're looking at a daily chart. Look what happened here on this specific candle. And that candle was on January 21st, 2026. We reached that level, and guess what happened? Buyers started stepping in because they recognized this support level, even though it's really old. I recognize it, and I was talking about it once we found support here. Because if you look again, this was created on January 9th. This is prior. This was created prior to. I said, guys, we're most likely on January 9th. I said that sometime around here. And you could probably go back to that video from January 9th, actually, on Friday, January 9th. Check it out. I created this level, this 82. I looked back, I said, where are we going to find some support? I basically switched it to a weekly chart, and there it was. There's the beauty. And the other thing I like about this is the fact that we have another area where price had found support even prior to this level. So you can go back all the way to actually January 17th, 2025. So January 17th, 2025 plus April 11th, 2025. Okay, and there you have it. And now there we are. We're stalling. Again, if we break through that, that's a problem. But maybe there's a little bit of optimism here, and maybe Netflix can potentially bounce. Let's see where we are at after hours with this one. I'm just kind of curious. Post market, yeah, we're still even post market, we're still above it. So nothing happened after hours yet. Okay, so let's keep going. We're going to run through these pretty quick. We don't really, now that you understand all the rules, we don't really need to spend too much time. You see, once you understand the rules, it's really easy. Amgen. Okay, this one looks pretty good. Now, notice these are the top ones, the ones with a blue flag. These are the ones that look bullish on both a weekly and daily time frame. I've already reviewed these. So Amgen, I like. It's in the healthcare sector, drug manufacturers. Here it is in the daily chart, has pulled back but finding support at the Tengen-sen. Here it is in the weekly chart. It does need to break through that 346.85, in my opinion. That's a monthly level. That's why it's colored purple. If I switch it to monthly, we can see that it's based on, I believe, this candle right here from July 31st of 2024. 346.85. Yes, that's correct. So monthly level, important, that needs to break through that. If notice what's happening here. Month after this is a weekly chart, stalling at that level, stalling week after week. Okay, even this week we had a spinning top. That's also a bearish candle. Um, showed that to you guys for those of you again who are new. A lot of you guys already know this stuff, obviously, but there are always new people coming to the channel. So bearish spinning top. Whoops, hold on. Right there. Do you see that? Bearish spinning top. It looks just like a spinning top. But if you see that after prices moved up at the top, that's very bearish. And so you can see it's moved up here, and it's higher probably. All that means, really, folks, is that there's a higher probability that we're going to get a pullback. That's all. Doesn't guarantee it. There's no guarantees in the market, obviously. So this is all a probabilities situation here. Caterpillar, look at this one. It's a beauty. This is the type of chart that I love, and this is the type of chart that also shows how effective the Ichimoku cloud can be with the proper type of company that is bullish, and the actual levels here are supported. This indicator, guys, was originally incepted in the late 1930s. Look up the history of it. Ichimoku indicator. Think about that. It was published in the late 1960s, and then it started becoming adopted here in the 80s in the US. A lot of financial institutions use this indicator to help guide them. Not all of them, okay? Maybe just the smart ones. All right, that's all. CVX, let's look at Chevron over here. We got oil and gas, which has been doing really well as a sector recently. Because remember, from these highs up here of $188 or so, that was back in 2022. Chevron had dropped over a matter of 2.4 years about 29%. But since these levels, okay, of $133. It's actually moved up 32.9% now, and it's on fire. And you can see on the weekly chart here, the cloud has turned very bullish. Notice how the cloud itself, where it was flat, the single span B turned upwards. Okay, that's a good sign. The single span A is also moving up. Price is above the Tengensen and the Kijinsen. It's above the 200-day, which is that dotted yellow line. The Chiku span is going straight up like a rocket. That's again the same price in a line form above the candles. That's a weekly chart. Here's the daily. Is it getting extended a little bit? Yeah, absolutely. But it's in demand, and that's what happens. Okay, when if the stock has been declining for an extended period of time, you can see that decline right there, that downward channel that was broken right here. By the way, isn't that interesting? Check that out, guys. Do you see that? See that trend line from that high to that high to that high? And if we extend it forward, look at that candle. That candle broke that trend line. It also broke above the cloud itself. And since that point, it's moved up 13.65%. So that's pretty cool. I like it. Okay, GILD, Gilead Sciences Inc., healthcare sector, drug manufacturers. Here's another one I like. Here's a weekly chart. Okay, 2, 3, 4 weeks in a row now. It's been moving upwards. I like it. The directional movement index is correct here. It's when the green line is above the red line and the ADX is moving up. The volume is increasing. Gilead looks good. It's in the healthcare sector. It's a defensive sector in this environment. That's not a bad place to hide your money. Um, so yeah, and if we look at the sales growth, I know it's only 3.14%, but this is a $173.2 billion capitalization on this company. So, and their next earnings aren't until February 10th. So those are coming up soon. So keep an eye out for that. Okay, IBM. Now, IBM, they were talking about that on the show. And let's look at the weekly chart first. The weekly, there's nothing really major happening here with IBM. It's just been consolidating, meaning it's been going sideways here, okay, for multiple weeks, multiple weeks. And at these levels, I wouldn't be interested here. On the daily chart, you can see that it gapped up here um, on Thursday, January 29th. It got up to 319 and it dropped 3.97%. So started getting sold off. So a lot of profit taking took place right there. ROK. So, but it still qualifies for the blue flag because technically speaking, the cloud has turned bullish here. Okay. Chiku span is above price. Tengensen and Kijinsen, they're around the same level there, and the price is above them both on the daily and again on the weekly time frame as well. I just don't like the fact that there's also this wick represents selling that occurred, and that's the selling that you see right there. ROK, Rockwell Automation. Here's another one that's on the daily chart is consolidating. Okay, building a nice base, and maybe this will turn into something. Here's the weekly chart. I like the weekly chart. It looks very steady. Nice uptrend. So it's been just chugging along. Rockwell Automation, industrial sector, diversified industrials. But it was down 1.19%. And Exxon, what about Exxon? Exxon looks great. Look at that on the daily chart, up 0.63%. So this was Friday's candle right here. Again, like, you have there's the reversal candle, right? So there's a spinning top. And again, that's just a warning that price might stall here and it might start to reverse. Now, the interesting thing is it did not get above that high. So there is something to be said about these reversal type candles. The question is it going to start maybe building a little base, take a breather here, and then continue? That's to be determined. We'll find out soon enough. That's the daily chart. Here's the weekly chart. Very bullish. I like Exxon. 3 weeks in a row above that 126.34 level from that prior high, going back to October 11th, 2024. And look at the ADX moving straight up. So, yeah, I do expect Exxon to continue to the upside. Verizon on the weekly chart, okay, broke through. It's at up 11 point. They didn't talk about this, I don't think. I just brought it up because I saw the big jump today. And up 11.83%. It broke through the Ichimoku cloud, but the cloud itself is still bearish here on the weekly chart. Okay. but this is a significant move. And the other reason I brought it up is because we were talking about this double bottom not too long ago. I think it was on January 26th. You can see there when I created that, I was talking about this low and this low, and the fact that the earnings announcement was coming out soon. And I thought, hey, you know what? I think there's a higher probability that we're going to see a bounce here. Why? Because price basically stalled here. It stalled at the same level. It didn't make a lower low. And double bottoms are bullish. Okay, let me show you guys again on the our other cheat sheet that we have. We have a double bottom on this pattern cheat sheet. You go to this area here. Let's click on that for a moment. And there it is, double bottom, reversal, bullish only. It's when price has been declining. Whoops, you just hold on one sec. So price has been declining. It reaches a level. Okay, let's say it's $5 or whatever. It comes up, comes right back down to that $5 level, and then bounces off that exact same level, creating this double bottom. Now, let's assume that price breaks through the high of that level, number two. That's when you know that the thing is going to probably take off. And looking at this, you can see that occurred. Okay, so there's the drop, right? Came up to this level where it found resistance at the Kijunsen and the cloud, dropped. Earnings announcement comes out. Okay, it comes out today, as you can see, January 30th, and bada bing, bada boom, breaks right through that cloud. And I think Verizon is going to probably, move up further, but we might see a pullback here next on Monday, some profit taking um, occur potentially because this is too big of a move. Right? Disney doesn't have a flag because the Tenkan-sen is under the Kijun-sen. I like it overall in the daily. They're coming out with earnings on February 2nd next week, so watch out for that one. Weekly chart doesn't look it's holding up above the cloud. I think just looking at these technicals on the weekly and daily, I think I have a more optimistic that Disney will do well into earnings, just based on what I'm seeing here. Because it's stalling here at the cloud, it's bouncing a little bit. There's a little bit, sometimes the chart can give you a little bit of inside information because you know what, the people that are in the know, they're buying this stuff, okay, behind closed doors, I'm sure of it. So that can be represented, and you can see that, of course, in the buying behavior, which is obviously projected here on this chart, okay, because the price is not breaking down going into earnings, it's finding support. Again, a very similar situation, another double bottom right here, where it was finding support at the cloud itself, right, on the Senko Span B. So if it can break above that level there and the 115.15, that's an old level. I should probably get rid of that one. Yeah, it's a really old level. Let's get rid of that line. It's no longer relevant. So I'm going to get rid of this too. Let's get rid of that. Some old levels that we got here. So we'll see what happens with Disney, but I'm more optimistic. If I had if you said you have to choose, okay, I would say that there's a higher probability Disney is gonna actually bounce. It's gonna pop to the upside. All right, let's look at some of the bad news here for gold. Down 10.27%, dropped a gap down. Now, here's another reversal candle, and I didn't mention it yesterday, but I also was kind of optimistic because the fact that we basically gapped up with gold. We dropped all the way down to the Tenkan, and then once we reached this level, buyers stepped in and they pushed it up. But even throughout that, it did form a reversal candle. That's called a hanging man, folks. It's when after prices moved up, you get that small little body that you see right there and a long wick at the bottom. Let me show you that one on our cheat sheet. Okay, let's look at that hanging man. It's over here. Okay, so again, you'll notice price moving up, and then it creates this specific candle, which looks like there's the body, there's the head, okay, the hanging man. That is bearish. It's a single candle pattern. And if it happens after a move up, like it did here, it's interesting that actually did play out and it dropped 10.27%. That's the daily chart. And let's look at the weekly chart because this is also not looking particularly pretty. It's very close to like a shooting star. The only difference is there's a little bit of buying that happened here towards the end of the week on the daily. See that right there. So if we switch it to a 5-minute chart, you can see that around 2 p.m. gold started to stall at 431 and it moved up about 3.19%. But this is not a really pretty chart here for the daily because it closed under. What happened, which was really significant, is the fact that it gapped down and actually gapped under a very important level, the Tengen, the 9 period. And then it's continued and it actually did close under the Kijunsen. So that's also very bearish. All right. So gold, yeah, not looking great here. Higher probability that it could potentially continue its drop. Again, I can't predict the future, but based on what I'm seeing, I would not be adding gold at this point, not quite yet. We'll see more bullishness at some point, and then it will make more sense. ON on holding AG on the daily chart is inside the cloud, and on the weekly it's under. So no, I'd skip that one altogether. Rocket Companies is under the Kijunsen and the moving and the Tengen-sen, so no on this one, guys. It's down 13.67%. That happened today. Notice how it just gap down. It came down to the 200-day, so it might. Whoops, get rid of that. Sorry, it's a really old one too. Came down to the 200, so it might find some support there. It did create a spinning top, but it's red. It's under the cloud. But if you see one of these after prices dropped, it actually becomes bullish. And again, let me show you what that means, how to determine that. Again, looking at on this side, the bullish segment. Same exact candle. If you see it after a pullback, it's more bullish. But the problem is it is red. And if it was bullish, if it was a bullish day today, if it was up, then it would be a higher probability it was going to bounce. So we'll see what happens. Next one is Starbucks, which has been pulling back these last 3 days. It's down 2.06% today. Smaller and smaller candles. So that's a good sign, actually. It's actually quite. I know it sounds crazy, but it seems more bullish to me because the volume has also been declining. So as price has been dropping, the declines aren't as significant, right? They're not as big, and the volume, meaning the participation of traders, is being reduced. So we might see a bounce here with Starbucks. Here it is on the weekly chart. You know, it's holding up right above the Kijunsen, but obviously I'd stay out of that one, right? It's under the cloud. Silver, oof, look at this, guys. Here's another interesting um, bearish pattern that we need to talk about. It's called the bearish engulfing pattern. It consists of 2 candles. It's a double candle pattern. So again, we're looking at the weekly chart right now. Look at this, down 28.54% for silver today. Look at the volume. Do you see this? 1.5 billion. Wow, that's crazy. That's insane. That's impressive. Yeah, 1.5 billion shares traded. So, yeah, basically what happened with this one during the week, it actually gapped up. It moved up some more, and then it just started getting sold off. So let me show you guys that cheat sheet once again, and we're going to look at the bearish engulfing. Here it is. Oops. It's right here. Okay. It consists of a small candle. Price gaps up, drops, and closes, okay, under the close of the prior candle. Okay. So price gapped up, drops, closes under that candle, the opening price of that candle. So that's very bearish, and especially if it happens on high volume, like you see right there. Now the ADX is still showing a lot of momentum to the upside. Let's look at the daily chart. There's the gap down right there, gapped into a Tengensen and dropped and closed under the Kijinsen. We can see here that the negative DI has crossed above the green line on the daily chart. See that red right there? So for the day, it was 507.5 million shares that were traded. It's quite a few. And prior to that, look how the directional movement index kept us on the right side of this trade the entire time, right? Do you see going back to here where the green line got above the red line? That was on November 10th of 2025. So it would have been on that candle right there. And, it moved up approximately from there. It moved up 144%, in 2.6 months. That's a huge move, 144%. It's only, it makes sense that it dropped. It has to take a breather. It doesn't mean that this thing is over, this trend in silver and gold, but I would not be adding positions until this thing is figured out. Uber on the weekly chart inside the cloud. Nothing major happening here. It's still stuck in this consolidation area on the daily chart. Also not looking good. They're coming out with earnings on February 4th. It does seem to be finding some support around this area. I don't know about this one. This one could be this could go either way. Let me just go ahead and fix this because that's not correct. So the low right there is 78.31. That's the level that it needs to stay above. If it gets under 78.31 and you have a position in this, but if it when they come out with earnings, it could drop a lot, 10, 15, 20%. It could be a big jump, just like some of those other stocks, like Verizon, for example. It could be to the upside or downside. All right, that's it. That does it for this video. Now, guess what? If you guys like this channel and you want to get access to the member-only videos that I do, I'm going to be coming out with one tomorrow. This is not accessible to the general public. You must become a member to get access to these videos. They're usually around an hour long, and I go over my entire portfolio. I do, go over all my trades. I placed a lot of trades today. I will say that. And you want to see, I explain why why I closed out of positions. So it's educational to some extent, and you can learn some things. You can also get a better understanding about my strategy. And if you want to, all you need to do to get access to that video is click on my YouTube channel here, click on join, which is right next to the subscribe button. It's free to subscribe to the channel, obviously, and you hit the notification bell if you want to get the notifications. You just click up here and you'll find it. But if you want to get access to those member videos, click on join. And there are 3 different levels here. Okay. Select Blue Cloud Trader. It's actually $4.99. It says euros here because I am in Europe currently. And sometimes it pops up that way. But it's actually $4.99 for Blue Cloud Supporter. Blue Cloud Trader is $24.99, and Blue Cloud Legend is $49.99. You can access those member-only videos under this level. That's the first level you'll be able to access those. And if you want to get daily trade updates, okay, daily trade updates, become a Blue Cloud Legend level member. So, for example, you would have gotten all the trade updates prior to the close today in a post. And basically, once you become a member, a new little tab pops up here. It's called membership, and that's where you'll find my posts. Okay. All right, guys. Thanks, and check out my links. There's more links here. If you like the software, for example, that I use, it's called TC2000 for my trading. You can get a $25 coupon by clicking on this link. Check out my TikTok. If you guys want to send money overseas, wise.com. Strongly recommend that. And there's the link for Twitter as well. Okay. I will catch you all in the next video.